Hello, everyone, and welcome to the BBA Show, Episode 7. This is Adam Wyatt, also known as AKW Analytics, and I'm here again with Rich, as always. Great to have you here, Rich. How you doing?
I'm doing great, Adam. Sorry we've kind of been off schedule lately. I think we both got bit by the allergy bug.
Yeah, allergies and just life in general. We at
Yeah,
BBA, BroBearAnalytics.com, we just moved websites and did a bunch of changes, and it's just been time-consuming, let's say that.
yeah, and you started that Slack group, which I know you're in there like 24/7 these days. I don't know when you sleep or eat or pay your bills or anything.
Yeah, I'm in there a lot. People love it, and I mean, I do too. Really,
Yeah,
I
I
mean,
love it.
it's like being, kind of in the pit, with a bunch of traders, new and experienced, and it's really it's a great experience for everybody learning wise. I think people are enjoying it. So, but anyway, yeah, it has been a while, but I think we have a lot to talk about just as far as crypto and global macro stuff.
Definitely.
I figured we'd go ahead and just start with Bitcoin. I mean, there's as far as price goes, as you can see by this chart right here, there's not really a whole lot going on. This is a daily chart. You can still see the spike to 500 here, but this thing is completely flatline, which is not necessarily a bad thing. Everybody's been talking about this big triangle we've been in, and we have as well. And we wouldn't be surprised to see some movement. Once it breaks here in the next week or so. But we also have been talking over the past week about what does history tell us about the halving event? I mean, we know this is coming, but we only have one other instance where this has actually occurred. And so I was like, well, we should go back and look at the charts and see what the charts are telling us. So right now, just keep this chart in mind. We're flatlining here, and then if we flip over to this chart of Bitstamp from 2012 going into 2013. We can see that we had a similar kind of spike move, and then just a flattening correction. People probably at the time might have been like, "Oh, this is a triangle, pennant, bowl, whatever." And then again, it just really, really got tight. I mean, I'm sure everybody at this point was just like completely fed up. And then so here we have the event, which was on December 28th, 2012, right around here. And you can see probably everybody was like, all right, here we go. Supply is cut in half. Moon, right? And then you get weeks of sideways, a little bit up, but it's not really until, mid-January and then really in March when this thing really started to take off. So people out there should just be prepared that the volatility could tighten even more. I mean, it's pretty low already, but history tells us that this event could have a squeeze effect that could last months that people should just be aware of.
So you think we could really get just super tight? And do you think that I know there's that big triangle, and you're right, everyone is talking about it. I've even seen like the mainstream guys.
The Raul Pauls, who we talk about a lot here.
Raul, but even like Peter Brandt, he's a really popular sort of old school classical chart formation guy, and he's he's probably just recently heard of Bitcoins because he's like 100,000 years old.
Probably.
And he saw the chart and was just like, you gotta be in this because this is a perfect setup. But are you saying that we could kind of break that triangle and just stay flat and just like
that's what I'm saying. So in the market, sorry to cut you off there.
That's okay, go ahead.
But in the market almost always makes the most amount of people look stupid, right? so the small minority of people get it right, but the market's going to make a fool out of everybody else. And so you got lots of bears saying, "Oh, this triangle is going to break. Bitcoin sucks. We're going to the downside. It's going back to 150, 200." Even some prominent analysts have been saying that. And then you got, of course, the triangle breaks and then moon new all-time highs within a couple months. A lot of those people, there's nobody else other than me, I don't think, talking about sideways that we could just get to squeeze everybody for months. So in my experience, that tells me that might be the most likely scenario. Now, Bitcoin's a whole different beast, and there's a lot of positive fundamentals and money flow coming in. You just had the Barclays Circle deal. You got Lightning Network and SegWit coming up. I mean, there's a lot of cool things happening fundamentally with Bitcoin that we don't really know how it's going to shake out economically. But if the chart is any indication, yeah, I mean, we could just frustrate everybody. Isn't Bitcoin good at doing that?
Oh, it's so good. It's so good. And just when you're starting to get, just at your wit's end and ready to just call it quits, then it makes a move. And it's probably the move that you least expected. I don't know. It's just,
yes, it's the one when you're on vacation. Yeah. You start in like 3 days and you come back and it's doubled and you're like, oh my God.
Exactly. Or I love it when I go to sleep and just like any other night, and then I wake up and we've moved, 10, 12%. And I'm just like, what happened?
Oh yeah. We'll see those days coming here soon enough. But again, I think the halving is scheduled to take place in the beginning of July. So some kind of move will happen this summer, but there's a long time if you're a day trader between April 7th and July or August, whatever, when this thing actually moves.
Yeah. So would your advice be just don't get chopped up until then?
Yeah, just to keep risk management in mind. This is a time when obviously you should be accumulating. Again, if this chart is any indication of the future, this consolidation time was a time to just load up on as many coins as you can. It was a gift because look at this move. That started in February. So I think you could view it like that, and the price action is kind of indicating that's what's happening. A lot of accumulation, a lot of tightening going on. So that would be. You can play. This is a daily chart. And this is a long time. You can play a lot of these intraday moves, and we do via the pro trades, but. If you're just a person, kind of a spectator looking at Bitcoin being like, oh, should I get in or not? Something to keep in mind. Right.
All right. Nice. Well, I'm excited. I'm curious to see where this goes. And I have a strong gut feeling that this is moving up.
Yeah.
After it could, like you said, I tend to agree. It may hold out until the halving that we see a real explosion, but I think it's coming.
Yeah, I do too. And I was just thinking about earlier today, Bitcoin versus Ethereum, because I wanted to just talk about Ethereum a little bit because it's been pulling back and we've had a lot of questions about it. But at this point, a lot of the news is out with Ethereum. There's been a lot of the media hype. All the outlets have picked up the story. They did Homestead and released the software and all that. They kind of a lot's should be priced in here. With Bitcoin, we have a halving in supply coming in the summer and a potential, upgrade to the network that, as far as I've heard, could provide millions of transactions per second, via the Lightning Network.
Yeah.
Everybody's been clamoring about. That's a lot of positive bias kind of, but unknown. Like we don't really know how those economics are going to affect price over the next 6 months. And so that makes Bitcoin really interesting from the long side, but it makes Ethereum kind of interesting from the short side at the same time.
Right.
I think a lot has been priced in. I mean, if we just go look at a daily chart of Ethereum, much different than Bitcoin. Market structure is coming in pretty bearish here. And, and we just really don't, at this point, right now, see the case to be made for it as a currency and a store of value. So a $10 to $15 price just seems above fair value to us. So, and we're also talking about how every time Bitcoin's had a move like from $1 to $15, it retraces the whole thing. I mean, it goes 90%, goes down to $2 or $3. I don't see why Ethereum would be any different. Do you?
No, not at all. In fact, I could see it being worse. based on its ability to be a store of value over time.
Bingo.
I think that it could be even worse.
Yeah. I mean, I've never seen anybody tweet or on Reddit or anything about how I bought something with Ether.
Right.
Something real, not one of these dApps or whatever one of their friends is building. I've never, nobody's ever bought a pizza with Ether. That's never happened.
Right. And,
if that happens, then I'm skeptical.
Yeah, exactly. And, I came across some good interviews about, I don't remember who the author was, and I should, but it was about how basically smart contracts, we're just not ready for them yet. Like the infrastructure is not there. Mm-hmm. We don't really have good uses for them yet. yeah, they'll play their part and they'll be really important, I think, in the future, but it's just not there. And right now, I don't think anyone is going to consider Ether at, $15 lying in wait for someday when smart contracts are ready to be implemented on like a regular everyday basis. Does that make sense?
Absolutely.
Yeah.
Yeah. Which also kind of makes me think that it shouldn't be really viewed as a currency. Bitcoin was built by Satoshi as a currency. The intention to disrupt monetary systems, and so it's hard for Ethereum to compete on that money in that money field because it wasn't designed really to be money. It was designed to just fuel this other kind of micro economy. Right. And so I think it's hard for people who really want Ether to be money. You got to go say, well, is that what Vitalik really wanted? Is they want this to be money? I don't know if he wants this to be money. Satoshi wanted Bitcoin to be money. No doubt about it.
Exactly. Yeah. And yeah, just like you said, it was built for an ecosystem, not for money. And to consider it money is just kind of outrageous.
Yeah. So it has value. Now, I think that value is probably fair value at this point, probably somewhere under $1. But it certainly has a value. I'm not saying, that it's some kind of Ponzi scheme, but $10 just still seems high to me.
Right. I agree.
Yeah. So anyway, that's just kind of my 2 cents about where we're at. And as far as Bitcoin goes, I think just hold your breath. Don't hold your breath, excuse me, because we could be here a while, but the fundamentals are really good, and the longer term charts look really good. So things are looking good there, but not looking as good in the legacy markets. Today was another wild day in the S&P 500. It was down a ton, and it bounced to close again. Of course, I wonder who's buying that.
Yeah, I don't know. I wouldn't be, but
your bankers somewhere are buying it, I think.
Yeah, you're probably right.
But that kind of Deutsche Bank kind of triggered the whole thing this morning. Zero Hedge had posted a chart as an analog between Deutsche Bank and Lehman Brothers back in 2008, and that kind of scared people, and that got us to talking. And we should take a look at the chart.
Yeah, I've got that pulled up here, and I didn't decorate it with fancy lines and stuff. I'm no real technical analyst, but what I do see is a nice downtrend with pretty obvious to me, dead cat bounce, and gone back to the lows. And I think we could break through here. And if we do break through here, it could be the end game for Deutsche Bank, and that worries me a lot, especially for the Eurozone, and then the sort of knock-on effect that could have on the sort of global banking system.
Well, who care? So why are they so important? Why do people care about Deutsche Bank particularly?
Right. So on their balance sheet, they are holding, I think it's I believe it's $56 trillion worth of derivatives. And so they're the counterparty to all these derivatives trades.
Right.
So if they run out of money, they can't pay these obligations, and that affects, $56 trillion worth of the economy. I mean, we're talking about a massive blow to the global economy, So this could really cascade and get out of hand pretty quickly. If this comes unraveled, it could affect the other banks. It could affect, because the counterparties to Deutsche Bank aren't just people; they're institutional investors, they're other banks, and if other banks can't get their money that they're owed because Deutsche Bank is bankrupt, then what's going to happen? Well, maybe the central banks print money to bail out the banks. Well,
Sure.
Then where are we left with? Maybe a Japan type scenario where we got zombie banks and everyone's just trying to stay afloat. That's not good for growth, and we're just going to stagnate for 2 decades.
Right.
I think the better scenario would just be to let them fail, let them learn from the mistakes. It's going to hurt. There's going to be a lot of pain, but we also get to restart with a better system.
Right.
So
I think the argument for some on the other side might be, well, it's Deutsche Bank. It's like the German bank in Germany is kind of part of the foundation of the global financial and economic system, right? If Deutsche Bank in Germany go down, then confidence is shattered all over the world, and investors flee like cockroaches, and it's all over.
Absolutely. I mean, I
That's
don't
Lehman
disagree.
Talk, right?
Yeah, I don't disagree with that at all. And yeah, you'll see gold prices shoot up. You'll see, yields getting crushed. Man, it could be a real just death blow, I think. And I'm not trying to be a scare, this isn't a fear mongering scare tactic or anything. Yeah. I'm just looking at what I see, the facts, and it's pretty scary. And so I'm a little worried about that. I don't know that it happens. We'll have to see if they break through this low, what the ECB decides to do if they start to ramp up any kind of program. Maybe it stalls this, but for now, I'm keeping a close eye on it. And the other banks too, it's not just Deutsche Bank, it's Santander, it's Credit Suisse. These guys are really struggling right now. So we got to keep an eye on that and make sure that we're positioned properly to put ourselves, I guess, in a way that we're not significantly affected by this negatively.
Yeah. Right. Yeah. And you could throw Barclays in there, but actually after this Circle deal, they might be trying to buy their way out through Bitcoin, which actually might be the only way out. So, maybe
I'm fine with that.
I like Barclays here, but I like what you said about the central banks maybe having to get even more involved here to try to bail out banks again, which kind of is a good transition. I think I haven't really been following the Forex markets or the central banks as much over the past week or two with the company stuff and Slack and everything. And I've been more focused on crypto. But I know that there's been a lot of talk in the financial media about the BOJ and how they've lost control because the yen continues to just, strengthen in the face of all this easing. And so, that's
in the face of negative interest rates, right?
To a lot of people, right?
Yeah. And it's, I think this is a direct result of the negative interest rates that they thought would help ease their economy has actually made it worse. They're seeing deflation, which makes sense to me. You've got depositors going into cash because they don't want to be charged, a fee for depositing their cash. And we're talking about major institutions, right? Not just people, because it doesn't really affect the individual investor right now. But what it affects,
they haven't filtered down yet, so to speak, right?
Right. It affects the people who have large bank accounts, like massive bank accounts, and then they go to cash or get out and go to JGBs or something like that. Mm-hmm. And then what's that do to the yen? Well, the yen's going to strengthen at that point. So it's really as always, I can't think of a time when a government implemented a law and they did the intended consequence happened. It's usually the opposite. It's just so blatantly obvious to me, and yet no one seems to be able to understand it.
Right.
The opposite always happens here. It's freaking Twilight Zone, man.
And it really is. And so, this is super confusing because you got the yen strengthening, but the BOJ easing, and the ECB kind of still bringing out bazookas every so often. But the euro's hanging in there too. So, what is this all saying about the dollar?
Right. So here's where I think we are right now. Let me bring up the dollar chart and I'll kind of talk about it. I'll leave it in the background as well. This is the 30-year trend chart, and I'll get to that in a second. But here's where I think we are right now. So there's kind of this feedback loop going on, and it's not a good one. So the Fed either hikes or talks about hiking, and then there's this the effect of that is tighter financial conditions in the economy, especially the U.S. economy and really the whole world. But then you get dollar strength as a result. So that kind of exacerbates the tighter financial conditions. We get economic weakness, right? Mm-hmm. And then we get policy convergence. So the Fed hiking is policy divergence from the rest of the world. So then we get reconvergence back into what the rest of the world's doing.
So that's Yellen saying we're only going to raise once or twice this year.
Yeah, I'd say that's at least, it's not as much divergence as what they wanted, what they intended, right? So I think I would call it convergence because it's more closely aligning with the rest of the world and what they're doing. So
yeah,
that
mean
leads
reversion, if nothing else.
Yeah, exactly. And so then that sort of leads to easier financial conditions, and then a dollar softness, which is what we've seen lately. We've seen 2-3% moves in the dollar coming down, and oh my gosh,
didn't they have to kind of soften the dollar though? I mean,
yeah.
wasn't Janet kind of pinned in a corner where she couldn't let this thing rip up through resistance here. I mean, everything would crash all over the world, right? So, I mean, I think this is part of the game plan. Like we talked about a few weeks ago, I think, the conspiracy theory kind of stuff, right?
Yeah, right. The sort of, what was it, the G20 summit?
That's it.
Maybe there was a Shanghai Accord type situation. I've kind of backed off. The more I read, the more I don't think that there's like a verbal agreement. I just think it's sort of an acknowledgement of the situation globally, and there's sort of this truce. It's more like a truce, like an unspoken truce to not fuck this up, to not let this get out of hand.
Yeah.
So to finish up the sort of feedback loop, then we get easier financial conditions and the dollar softness, which is what we've seen, and then the economy bounces back slightly, and everybody's like praising and hollering and oh, we're going to be fine. These dollar bulls, they're just full of crap. And, but then we get a kind of rinse and repeat scenario. So something's got to give. We're kind of in this really tight feedback loop that there's not a lot of room for error. And here's why. In this time when there's dollar softness, and it's relative, it's not much, but, relative to the move, you could see here up, the dollar softness is really nothing.
Right.
But during this time, it offers a chance for, refinancing debts, sort of policy reformations, China to figure out what they're going to do to stay afloat, really. But if we get a weaker dollar and, if we break this trend line here, this 30-year downtrend, maybe the dollar does come back to the 80 range. But that puts a lot of pressure on Japan and Europe. A lot of pressure, and then they struggle. And so what then? We're kind of in the same hole. Right. Yeah. Maybe it's not the U.S. this time, but it's the Eurozone and Japan. So that's a problem.
Well, I'm just thinking, part of that feedback loop was growth. Like you soften the dollar and then you get growth. But I think we're seeing lately with the data, in a time where seasonally the U.S. economy should be humming in March and April. I mean, this is like, March, April, May is like prime time spending season. Economy go, data should be great. Data sucks. And so they're softening the dollar and the data continues to get worse. And so what is that? That screws up that whole loop, right? So if you soften the dollar and you don't get growth, then people just go, oh, well, that place just sucks. Let's just sell the crap out of their currency.
Right, exactly. So, do you think that's why we've seen the S&P kind of take a hit because of the latest data coming up?
Yeah, I think that has a lot to do with it. There's a lot of technical stuff, and with the S&P, it's like super overbought. And I mean, there's a lot of people that want to get shorted. But yeah, I think that could have a lot to do with it, is that people are going, Yellen's not raising. We've had a huge rally in the stock market off the lows with no correction, and the data is not great. People are not spending. People are still stretched.
Right, but if
is not a substitute for real economic growth, we're going to find out. And so I think people are just, boy, this just sucks.
Yeah, but I still think that is bullish for the dollar, right? If everyone is like, we need to go to cash. If global growth comes to a halt, all that is because there's still
dollar safe haven. That's the saving grace, Rich. You're right. Is that safe haven bid, that reserve currency? If that goes, then it's all over, right? For sure.
I agree. Now, what is in favor is not. So yes, you're right. The safe haven status is it's just, I think it's one of a multitude of characteristics right now of the dollar that's gonna drive the bull market. And I'm still looking at the $10 trillion carry trade that's still out there. It's still lingering. Yeah, and maybe part of it's been closed out, and it's not as in worse shape as it has been.
Mm-hmm.
But we're still talking about, okay, $5 trillion carry trade. Let's look at that. It's still a similar scenario where I think global growth comes to a halt, starting with the U.S. or ending with the U.S. It doesn't matter. At some point, that carry trade has to be closed out, because the reason that they borrowed dollars in the first place was to capitalize on emerging market growth. Well, that doesn't look too good at this point.
Yeah.
And recently there's been an influx. Let me show you this chart here. I used EEM, the ETF, emerging market ETF, to kind of be my proxy for emerging market growth. So you've got that and the candlesticks, and you've got I think that's right. Yeah, the candlesticks are the EEM, and the black line is the crude oil price. And I was just going to show you how they've been tracking each other pretty closely here.
Yeah, that's insane.
Yeah, right. So for me, I think that, emerging markets are still in trouble. Yeah, we've come off the lows here, but to me, that's just a dead cat bounce. And it's interesting because the majority of the move into emerging markets, and this is from Morgan Stanley, they did a report on how the recent majority of the move into emerging markets was due mainly to the developed market sovereign bonds offering negative yields. Yeah. So what are we doing? We're driving more money into, really, really risky investments.
Yeah.
And we're not talking about investments in companies. We're just talking about, institutional investors and hedge funds and things like that positioning for, to try to make a return, right? So that's hot money. That's hot money. So we're looking at $36.8 billion of inflow in March that followed a $5.4 billion inflow in February. So, $40 billion inflow over 2 months into emerging markets.
Mm-hmm.
I think it's just hot money. And as soon as we get a move one way or the other, this is going to come falling back down to earth.
Yeah. Boy, it's so complicated because, you say, well, then what does that do for stocks? Again, this whole feedback loop. But just hearing you talk about these numbers, the flows, the 38 billion, 40 billion, and then the $10 trillion carry trade, which could move the biggest market in the world, which is the dollar market, puts in perspective how massive Deutsche Bank's garbage is, right? So if $10 trillion, that's all it takes to move the Dixie to new regional highs. If that's all it takes, then $56 trillion in derivatives is going to wipe the floor clean with everything. I mean, it's all over. I can't imagine how they're going to salvage it.
Yeah, it's not possible without, I think, some sort of hyperinflation. If the Eurozone has to print to bail them out, or if, the central banks around the world have to team up to bail them out. Yeah, people lose confidence.
Thing.
Yeah. So my target here is 120, and it always has been. And so I'm still looking for that move. The cup and handle maybe fell apart here. We're just looking at probabilities with the charts. So I'm not losing confidence right now. I went through a period where I was like, is this going to happen? Am I losing my mind here? But you look at the fundamentals, nothing's changed. So until we break this downtrend line, I'm still bullish dollar.
And that's what I'm saying. I think they could go, given all the things I'm kind of thinking at the time, right now they could go test that trend line. But I think, again, people will, if that happens, if that keeps coming down, I think people will move in on the safe haven bid, seeing declines in stocks on the horizon. So even if we do get down there, I see reason for a bounce too.
Yeah. So just one other thing I wanted to point out is I've noticed a lot of talk about the oil price recovery, and I don't understand how people can call it a recovery when just a year and a half ago, I think it was a year and a half, we were at $80 to $100 a barrel. 50% of exploration and production oil companies, they go broke at the current oil price levels. So, and that's directly linked to dollar levels, right? Like if, I'm not going to get too much more deeply into that. Just know that, $40 a barrel looks nice compared to 26, but we can't stay here. Like these 50% of these companies could go broke at this level. So that's an end gamer as well.
Yeah, and that just brings up a good point about how myopic and short-sighted the media is when they cover these things. It's up from 30 to 40. It's a massive recovery. It's down from 120, 5 or 10 years ago. And the same goes for Bitcoin. Of course, we know this, that everybody loves saying, oh, well, Bitcoin is still down 60, 70% from its all-time high, it's in fact, actually, now that I think about it, so it's the other way. In fact, everything works the opposite with Bitcoin. They always want to make it look bad, right?
Yeah,
so
exactly.
Now that it's up 100% since last year, but they still talk about how it's down from the highs. But oil, down up from 30 to 40, and they go, oh, it's the best thing ever. So
yeah, exactly. And yeah, they look at this part here, but they don't look at the huge picture. If you look at like a 2-year chart, this thing is just. And
right.
We had this double bottom sort of set up here.
Looks good technically. That's
that's what we're getting is smart money playing this bounce.
Yeah.
And then now they've closed their profits. What was that? Let's see, 30. Is that a 30% move? I don't know. I'm terrible at on the spot.
What did it go for? Was it 20?
From 27 to 42. So
yeah, I mean that's a good, almost 30% move. I mean that's for a market that size is huge, right? I mean that's a ton.
Right. They just got 30% returns or more or less, and then they closed their trades, and now everyone else is trying to hop in and catch the ride, and they're just going to be left holding a bag of nothing. That's
right. Yeah, it's scary. That kind of reminds me. I saw on Zero Hedge again today. This the chart they post every month of fund flows in and out of stock market, and institutional flow selling accelerated again, and it's close to 2008, 2009 levels again. Like the banks and the big hedge funds are selling everything that they can sell. Right now in all these rallies.
Right. And this gets my blood boiling because the people who are buying right now are the people who, the mom and pop that, they're probably relying upon this for their retirement. And this, I think I've gone on this rant before, but just the idea of having, the system we have right now in the US and globally really is we force people into the market because of, our currencies don't hold their value over time. Right. So these poor people are going to just get rocked, and it's not their fault. It's the nature of the beast that we live in, that they're forced into the market to make sure that they can maintain their purchasing power over time. But in the meantime, you also see these big banks issuing these reports of bull market is in play. We're going to all-time highs in the stock market. Meanwhile, behind the scenes, they're selling off, right? They're trying to make their money, so they're selling off into the hands of the mom and pops who are going to be left holding the bag when it's all said and done. So that just makes me so angry.
Yeah, and that's it's kind of always how markets have worked. Big boys dumping on the little guy kind of thing. But it's reached a point now where you have collusion between the government and the banks and the media, to where it really is just a massive, horribly unethical scam that's going on right now. It's got to stop at some point, either by nature or whatever. But it won't. Yeah. Eventually, people would just be like, "We're sick of you guys fooling us.
Yeah,
we're done with you."
Yeah, I agree, man. I couldn't have said it better myself.
Awesome, man. Well, Ben, this has been a good show. I think we ran a little long today, but that's good. We had, like I said, we had a lot to talk about.
Definitely.
And we'll get back on schedule here going forward.
But it sounds good. I enjoyed it, man. Yeah,
this was great. It should be interesting couple of weeks. We might see Bitcoin break out. Next time we talk, we might be talking about much different prices, but we'll see. It'll be interesting, and I know we'll be talking about it together. So everybody visit Bull Bear Analytics. Rich, thanks again.
All right, thanks, Adam, and everybody join the Slack team if you can, man. That's awesome. You don't have to wait 2 weeks to hear about Bitcoin breaking out. I'm really enjoying my spot in Slack. So thanks for starting that, Adam.
Absolutely. Well, we love it too. We love having y'all there, and thanks for the shout out, Rich. We appreciate it. And you have a good weekend, man. We'll talk to you soon.
You too, Adam. Take care.
All right,
Bye.
cheers, buddy.